Hey, good morning. 6 o'clock here at NYC. This is hopefully going to be a short video. I've been watching what's been going on basically over the course of the whole weekend. Paying attention. For those that don't know, if this is your first time watching, I do work primarily as a nurse in here in the city in a major hospital. And especially having heard about what was going on with the coronavirus, it was very obvious that the Dow and the market was going to sell off. And in my original, I think one of my original videos, I talked about how the market was going to hit the 24K mark. We will more likely hit that 24K mark either today in the morning, as the market is already showing down 1,000 points. Probably going to end up hitting 24K. So I would say watch the market, because I know there's a lot of people. I've been looking at all types of different YouTube videos, and they're like, I'm buying this stock and I just put in 15K into this stock. I think one guy bought CCL and like 36 or something, and the fucking stock is like $10 off of its low. And it will more than likely continue to going down. I mean, who is going to be going on a cruise? I mean, granted, there are some people that we were like, why are you still going on cruises? But in any event, just talking about like the S&P, Dow, what you're going to be looking for is a retracement, probably down to, looking at the indices here, you're going to see an easy 24K. Like the market will hit 24K. And that's just getting started. So I know a lot of people are like, this is your opportunity, to buy the dips. In my opinion, I've been trading on and off, swing trading, swing trades, day trades, long-term holds. In my opinion, the market is going to come back down to 18K with everything that's going on over probably the next year or two. You're going to see a hard retracement, probably today down to 24K. And then subsequently look for a retracement down to 22K. Looking at the stock looking at the stock like on the 5-minute chart, you can see that when we broke the 26K, that 26K was not a real hold by investors. This was when the market was receiving liquidity from the government, when the government was injected, I think like $1.5 trillion or something like that. So it's not a real level. It was one that was artificially placed there by the government. And yeah, the government may step in to buy, but the problem is that the government is stepping in to buy people who are going short, and of course people who are dumping shares onto the market. And eventually they'll realize that they can't keep on injecting liquidity into the market, into a market that is just basically bound to collapse. And so if you are a long-term investor, I mean, I did start my M1. I did inject more liquidity, mostly on these big pullbacks. When the market pulled back, I looked for stocks. I looked for stocks that were, as you can see, I'm not exactly in line with, and that's just because I was just buying certain stocks that were pulled back a little further. Same thing, as you can see, my risk portion of my portfolio, you can see it's completely out of whack, as I've put in more money into certain things that I think will eventually, over the next couple of years, I guess, especially with what's going on. In any event, and talking about the levels, I just wanted to reiterate again for those who are watching to watch the 24K level. If the market collapses below 24K within the trading day, like if we close below 24K, then I would not worry about 24K. And then the next level that I would look to for any sort of stability within the market, which would probably be 18K, which is where we took off, right? You can see it here for the better part from 2015 to almost 2017. The market stalled below 18,000, which is the exact same thing. You saw with 27K, right? You can see that right there, where the market stalled below 27K, and of course we are trading well below 27K. Of course, we blew through that within one day, and the subsequent rallies you can see right here, where again the markets could not hold 27K. So it could just literally, it just goes back to support and resistances over shorter periods of time. And of course, looking at the chart, basically we blew through that 20, what should have been a 27K support. The market immediately blew through it on the news of going on with what's going on with the coronavirus and how it's going to impact global markets. And you can see that the market literally retraced right back to 27K, because what was a support became a resistance, even with the government injecting liquidity into the market. You can see that here. It's a little bit harder to see. Let's see if I can put that maybe like on the 1 hour. And you can see that the markets really could not hold the 27K mark. 27K became an area of resistance. It was an area of support previously, and it became an area of resistance now. And so our next area for resistance is going to be 24K. And you see we bounced here initially when the market came all the way down to 24, I think it was 24.6 and change. Let me see if I can get a better picture of that. We came all the way as far down as right there. You can see 24.681 was the low, and that was on February 28th. And we are more than likely going to retest the 24K mark. If the market breaks below 24K, I know that there are many YouTubers who are saying, buy the dips, buy the dips. What will more than likely happen is you'll see the collapse, which you saw previously in previous years, where the market collapses very far down. And of course, the higher you buy in a market correction or in a market collapse, the higher you buy basically means either you have to inject more liquidity into the market at what is deemed the lower areas, or it takes you longer to wait to actually earn your money back. So I know a lot of people who are like looking to pull the trigger. They're seeing stocks drop by 20, 30%, and they're like, we're going all in with some serious buying power. I would definitely say to wait. As you can see, looking back, just looking back on the daily, you can see that there is ample opportunity looking at the daily chart, all the way as far back as 2009. It's important to pay attention to what charts look like in the past to understand what they possibly may look like in the future, because people will be paying attention to what the charts look like in terms of technical analysis, fundamentals of supports and resistances. And if you're just looking, I need to get in right now. As you can see from the crash of 2000, 2006, 7, 8, 9, all the way down here into March, you can see that there was ample opportunity over the course of April, May, June, July, even into August, where you had, realistically speaking, you've had months of opportunity. And so it's an opportunity for you to wait, watch the market. Is the market bouncing? Are we finding areas of support where you can see right here? Back in November of 2008, you can see the market for multiple days over the course of October into November, December, all the way up into January. And then the market finally broke what looks like this 8,000 mark. And then you can see, looking back on the daily, where the market finally made a rebound and then a subsequent retest, right? The retest of the 8K mark. What was your resistance, what was the support that finally led to the collapse down into about 6,400, subsequently became an area of support. It was a support here until it finally broke. You can see right here where the market stalled right here, right? You can see that right here where the market stalled here, and then finally on the bounce or on the move to the upside where the economy started to pick back up, you can see that the market stalled here for a good period of time up in March, up until April, all the way just to about the end of April, and then we see the subsequent retest. And this is what you would look for when the market is in essence reversing. And this is where you want to be, basically, if you're working a 9 to 5, or if you've got a 9 to 5 and a side hustle, or if you're just like a business owner, this is where you want to start to look to inject liquidity into the market. If you were someone who was buying, here and here, and you're like, I'm going to buy, and you're going to average it down, it takes much longer. One, it makes it much harder for you to hold, because you're going to see your account dip much further into the red, which of course is going to have some sort of an effect when you're literally week after week, and maybe month after month, you're continuing to inject liquidity into your account, and you're seeing that money just basically disappear. And just because you buy stocks that you deem that are very cheap, it doesn't mean that when the market recorrects into the opposite direction, that those companies will still be around. it's important to pick companies that are doing well. Most people, I see a lot of people that are like looking at CCL. I even was looking at CCL, have a little bit of my money in CCL, but more than likely, I don't think you'll see corrections in like cruise line stocks for a few years, which means that that money that you're putting into the cruise lines sits for a longer period of time, where it could be building into a different sector of the market that will have better returns. Anyway, I'm looking forward to the open. It's just a few more hours to the open. I just want to put this out there. I know a lot of people are going to be like looking for opportunities. They're going to be thinking they're buying cheap stocks. In my opinion, I think the market is going to come very far down. And a lot of you people who are like, "Oh, this is the correction I've been waiting for," are going to find yourself, are you going to find yourself staring at a big red number here, and you're really going to need the stomach to hold for that. And I would say wait. I mean, in my opinion, I would look, if you were going to nibble, I would probably nibble at 24K, see what stocks are basically oversold in comparison to others, see which ones are showing areas of strength, and distribute a little bit of money at key areas like 24K, 22K, and then look for a subsequent rebound at 80K. I think a lot of people aren't going to think that the market is going to correct that hard. I think the market is going to correct that hard with what's going on. But I would say that there is ample opportunity for when the market does change direction. It changes direction very abruptly, but when it changes direction towards the upside, it happens very slowly as people kind of tiptoe their way in. You're not going to catch the bottom. Don't be the guy, as they say, that tries to catch the falling knife. Pay attention to where we start to show areas of resistance. You can see that even right here, where there was an area of support at 16K and an area of resistance at 18K, and finally the market went up, and then it rose, and then it rose up, and it rose very gradually. Be very careful with the money that you inject into the market. Pick your stocks wisely. Thanks for watching. Take care. Have a great day.